Stock options are great because you can make money really fast. You can double your account size really quickly. But you know what goes right along with those huge profits? Yeah, you can blow up your account just as fast. In this video, I'm going to answer the questions: why do people get lulled to sleep when the market is going up and forget about downside risk? How do you grow an options trading account quickly without risking it all and blowing up your account? And I'm going to show you exactly how to buy protection for very little money on the option trading platform. Hey guys, Darren here. We've got a great video for you here today. However, before we get started, if you appreciate the time and effort that goes into making these videos, all I ask is that you please hit the like and subscribe buttons. It really helps out the channel to get the video out to more people, so thank you very much. I think it's really important that we understand the different strategies that the rich are using to get richer. Then we can use those same strategies and tools to profit in any market for ourselves safely. Be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Why do people get lulled to sleep when the market is going up and forget about the downside risk? Guys, when the stock market is going well, everyone is making money. The economy may be buzzing along. Companies are reporting earnings and beating expectations, and the stock prices are just taking off. When things are going well and people's 401ks and savings accounts are growing, it's not top of mind for people to think about hedging. It's not until a pandemic, a war, a bank collapse, or who knows what's going to happen next. Right now, the Fed is expected to have multiple interest rate cuts coming this year. However, there may be a risk of stagflation, which is when inflation is high, economic growth rate slows, and unemployment remains high as well. It presents a dilemma for the Fed's policy, as actions to lower inflation may make unemployment worse. So if any of these situations occur, people all of a sudden get caught off guard and their accounts may take a huge hit. And guys, it's not just if this is going to happen again, it's when. Don't get me wrong, I'm not hoping for any of these things to occur. No one wants that. It's just that every 5 to 10 years, when the market is humming along, we hit a snag and something happens. Everyone is caught off guard and a lot of people get scared and sell all of their stocks and just get out of the market. As more and more people sell, the market just goes down further and further. That's not the way to do it. This is when you want to have money on the sidelines ready to buy or go long if you're trading options. Warren Buffett said, "Be fearful when others are greedy and greedy when others are fearful." So when everyone is panicking and getting out of the market, prices go back down to their lows. This is the time when you want to get long the market. But we have to have money to do this. If the market just dropped, we may have lost a lot of money, right? Not necessarily. So let's take a look at how you can grow an options trading account quickly without risking it all and blowing up your account. Stock prices don't typically blow up to the upside. The way that people blow up their option trading accounts is normally when there's a big drop in the market that happens every 5 or 10 years. So for that reason, we want to have a hedge that we don't even have to think about, something that kind of serves as insurance against the long positions that we have in our account. When the market goes down, it goes up to offset the losses on the long side. One way to do this is to buy shares in SQQQ. This is the Pro Shares Ultra Pro Short Qs, and it seeks daily investment results before fees and expenses that correspond to 3 times the inverse of the daily performance of the NASDAQ 100 index. So in other words, when the Qs go up in price, the SQs will go down in price. So obviously, this is great in a market that gets hit by something that brings the market down and really tanks it. Then the SQs will go up. Take a look at buying 100 shares of the SQQQ on as a hedge and insurance protection against a big down move. Take a look here when the market drops big. The SQs could easily rocket up from the $12 to $60, and you can see here at a $60 price, those 100 shares provide about $18,000 worth of protection. So in other words, when the other positions in your portfolio take a hit, the SQs make up for it and keep the performance of the total account or portfolio going strong. This is where, when it does happen, you can then sell the SQs, those shares, and probably buy right back into the market as long as you know that it's settled and at the bottom. But that's the key, right? You want to know that we're all clear and we're at a bottom or near the bottom. However, how often does that happen? The market takes a big hit, 20%, 30%, maybe every 5 or 10 years. What is the downside to hedging with SQQQ? Now, if we look at Investopedia, we see that it indicates that SQQQ is unsuitable for long-term holds since the expenses and decay slowly eat away at your account. But I'm not planning on holding it long-term. I'm only buying SQQQ when the market is overvalued and at all-time highs. Since the general trend of the Qs is to grow over time, the long-term outlook for the SQQQ is bleak at best. That said, I did it anyway. So, how do you buy protection on the option trading platform? We're going to use the Tastytrade option trading platform. You can do this on any platform or brokerage. However, Tastytrade is one of the best and most intuitive for trading stock options. These are the guys that developed the TOS Think or Swim option trading platform and then sold it to TD Ameritrade. TD and Schwab still use this platform to this day. Use the link below and you can get cash back when you open an account. I do recommend that you open with around $5,000 so you can place a few different trades. We punch in SQQQ in the upper left on the trade page to pull up the option chains. We click on the tab that says Long Stock. The stock price is currently trading at $12.50 mid-price. Now we are buying 100 shares, so this is really $1,250. Clicking on the curve mode, we can see that as the stock price increases, we profit. Remember, the SQQQ stock price only moves up when the Qs or technology stocks as a whole move down in price. You never know when the stock market will take a big hit. Sometimes it's nice to know that should it take a dive, you're protected and can just sell your SQQQ stock and bank the profits. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well at first. We'll continue to learn and succeed together. I put a link down below for the free options workshop. Remember to grab that. Please hit like and subscribe. Let's get the video out to as many people as possible. Leave a comment. Let me know what you're trading. Ask a question. I answer everyone. Thanks for watching. See you in the next one.